buying when the market is at a bottom and selling when it's at a top. That's the key to making profits in trading. Here, the indicator has identified a market top. So let's take a sell trade and see what happens. We'll place a stop loss just above the channel of the indicator. Now let's let the trade run. And as you can see, after some time, it turned out to be a winner. Now looking at this market bottom, it's time for a sell position. So we will open a sell position here. Stop loss goes just below the bottom channel. Now let's let the trade play out. And once again, after some time, the market moved heavily in our favor, and we got an amazing 8-to-1 risk to reward ratio. In this video, I'll break down exactly how this indicator works and how you can use it to improve your trading. So let's start. To add the indicator to your chart, open TradingView and select any trading pair on any time frame. For this example, I'll be using the 15-minute time frame on GBP USD. Next, go to the Indicators tab from here. Here, type in TopG and select the one named as TopG Indicator by Big Beluga. So what exactly is this indicator? The TopG indicator is a simple yet effective tool designed to help traders identify potential market tops and bottoms. It focuses on market extremes, making it ideal for timing entries and exits, whether the market is trending or ranging. The indicator consists of a trend channel with 3 key parts: the upper band at the top, the lower band at the bottom, and the midline in the center. These bands act as reference points for price movements, helping traders spot support and resistance levels. When the price reaches the upper band, it signals potential overbought conditions, meaning a reversal could be near. On the other hand, the lower band indicates an oversold condition, meaning the price might bounce back up. The midline helps gauge whether the market is trending strongly or consolidating. Now, the most important components of this indicator are the top and bottom labels. The top label appears when the market is reaching a high probability resistance zone, signaling a potential reversal to the downside. This is where traders may look to exit there, buy positions, or open new sell positions. It's based on price action dynamics that show market exhaustion. On the other hand, the bottom label, marked with a G, signals a high probability support zone. This means the market might be preparing for a bullish reversal, making it a good spot to open new buy trades or exit already open sell positions. Additionally, the indicator provides intermediate signals in the form of these small arrows. These indicate potential reversal zones, but with less certainty than the G labels. The upward arrow suggests a possible bottom, while the downward arrow suggests a potential top. These signals are useful for traders watching range-bound markets or looking for additional confirmation. Before we get into how to trade with this indicator, let's go over its settings.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
You can open the settings from here. In the Input tab, you'll see the length setting, which defaults to 150. This determines how many candles the indicator uses to calculate its range. A higher value, like 150, smooths out the signals for a longer-term view, while lowering it makes the bands more responsive to recent price changes, generating more frequent but noisier signals. You can also change the color of the indicator. That is totally up to you. I'll keep the length at 150, but disable the midline for a cleaner look. Once that's done, click OK. Now, let's add the MACD indicator for extra confirmation. You can open the Indicators tab again from here and search for MACD. After that, you can add it to the trading chart. First of all, we will change the settings. So access the settings from here and go to the Style tab. Here, disable the MACD line and signal line for a cleaner setup. Click OK. and we're ready to go. The idea behind this strategy is simple. Use the TopG indicator to identify market tops and bottoms and combine it with MACD divergences for added confirmation. For a buy trade, the first step is to look for a bullish divergence on the MACD. A bullish divergence requires three things. First, identify an initial MACD low where the histogram shows a clear trough. Next, let the histogram turn green and create several bars. After that, wait for another MACD low with red bars. As you can see, we want a structure like this to form. The key here is that the second MACD low must be higher than the first one, signaling a potential bullish reversal. On the price chart, you can draw a line from the first MACD low to the second MACD low, just like I have done over here. If the price is making lower lows, like we can see here, while the MACD is making higher lows, which will look like this, that confirms a bullish divergence. Once you have this divergence, look for a G label appearing within this area. This increases the chances of a strong reversal to the upside. The final confirmation comes when the MACD histogram turns green again, signaling bullish momentum. This is where you enter a buy position. So I will open a buy position here. You can place your stop loss below the lower band. And for this strategy, you can set your take profit at 2 times the risk. Now, let's see if the market would have hit our take profit target. In this example, the trade was profitable. As you can see, we would have even gotten a 3-to-1 risk to reward ratio on this buy position. Now, let's go through the rules and conditions for opening a sell trade using this strategy. For a sell trade, we follow the exact opposite steps. The first step is to look for a bearish divergence on the MACD. A bearish divergence forms when the MACD creates 2 highs with a dip in between. The first MACD high must be higher than the second one. It should look like this. While at the same time, the price should be making higher highs. I have drawn a line here, and we can see that higher highs were forming. This confirms a bearish divergence. You can also draw a line connecting the MACD highs. Then check if a top label appears anywhere within this zone. If a top label is printed, it signals overbought conditions and a potential reversal to the downside. The final confirmation comes when the MACD histogram turns red again, indicating a shift to bearish momentum. This is your entry for a sell position. So I will open a sell position here. You can place your stop loss above the upper band, just like I'm doing here. Set your take profit at 2 times the risk and let the trade run. Again, after some time, we can see this trade turned out profitable. In summary, the TopG indicator by Big Beluga is a simple yet powerful tool for identifying market tops and bottoms. When combined with MACD divergences, it provides high probability reversal signals, helping traders time entries and exits with precision. That's it for this video. If you found it valuable, hit the like button and consider subscribing to stay updated with more strategies. Thanks for watching, and I'll see you guys in the next video.